Welcome on the podcast, Nick. So maybe quick reminder, I'm Laszlo Szabo, the CEO, co-founder of Kiln. Today, I'm glad to be joined by Nick Van Eck, the CEO and co-founder of Agora.
Thanks for having me.
Thanks for being on the podcast. So just today, we'll be diving into DeFi, a revolutionary financial system heavily relying on stablecoins. The stablecoin market is skyrocketed to nearly 170 billion, with projections of reaching 3 trillion in the next decade. With your pivotal role in the space, it's great to have you here, Nick. Congrats on the recent fundraising, the launch of the Agora-backed AUSD stablecoin. What a journey.
Yeah, thank you. It's been a busy couple of months, and we've gotten a lot done in the last year. We actually started the business almost a year ago to date of this podcast and launched the product about 3 months ago on ETH, but we're already now on Avalanche, Sui, and by the time this podcast come out, we'll have been able to share that we're on Mantle as well, natively. We're doing about 10 million plus in on-chain volume a day, and nearly 100 million minted. So quite a big few months, and we're just starting the SEX rollout. So the centralized exchanges will be coming very rapidly. So a lot to talk about.
Congrats. That's definitely a topic I would like to deep dive in the different ecosystem, the chains, the different geography you're looking at. And I would say maybe before we deep dive into Agora and your strategy and the places you're at, could you maybe introduce yourself, your background, and your journey in crypto?
Yeah, so I grew up surrounded by markets and investing. My family runs an asset management business, and so I think I got exposed to that sort of thing much earlier than most. I remember when I was a very young kid getting handed the Wall Street Journal or Barron's on the weekend by my dad and, being told, tell me the most interesting thing that happened this week. And, it was all financial news. And so I had, developed an interest in investing and markets, and always thought that I wanted to be an investor. So I spent a lot of time, both in high school, reading biographies of the best investors, and then through college, was trying to figure out what in the investing world I wanted to do, and inevitably that led me to working for a hedge fund. I spent the summer at a hedge fund in 2016, and all the partners there were actually buying Bitcoin PA. It was right before the second halving. Murray, the founder of the firm, had stumbled upon crypto and was intellectually curious enough and contrary enough to dive in, right? It's like, why are there these 3,000 plus crypto assets? And so he took a hard look at Bitcoin, had a thesis that it was going to hit 100K by 2030. And it seemed like a relatively simple thesis, right? Demand goes up, price goes up, and you had a fixed supply. And I had a lot of familial experience with the gold market. So Van Eck, which is my family's business, runs the largest gold miner fund in the world, and so I grew up getting Cougarans from my grandfather, and so I understood the gold thesis and said, hey, this is much more interesting because you have this open source global network that this is running on. It's 10 to 100x better than gold, and so that's when I first got into crypto. But I spent the next 5+ years as a technology investor, focused primarily on enterprise software, where I developed a much greater understanding and appreciation for open source technology, and got sucked back into crypto right around DeFi summer. And for the first time, there were real applications that I wanted to use, right? Using Uniswap, Aave for the first time was like magic. It was like using the iPhone for the first time. And to me, it was very clear that blockchain was going to eat financial services and payments. And I think, throughout the cycles, there's always sort of this the institutions are coming. And this is going to be it, right? To me, it's the institutions are already here, but these things take 20 to 30 years, just like the cloud transformation and transition. But at the end of it, you're going to have 100+ public companies, trillions of dollars in value, And I feel like we're just at inning number 1 or 2, whereas I got into the investing world in enterprise software probably inning 6 or 7. And so that's what sucked me back in. Convinced some of the managing partners to let me invest in the space while I was at General Catalyst, and then decided to go build a company that I believe should exist. So I left in October of 2023, and here we are.
Fantastic. Yeah, that's quite exciting journey. And do you see any synergies between the family business and what you're building?
Yeah, so there's a lot of synergies on the asset management side, right? So when you're running a stablecoin, it's really important that you manage those assets well and custody them at reputable financial institutions. And when I was looking at the market, but also what was going on with sort of choke point 2.0 and all of that stuff in the United States, it's very hard for crypto companies to get access to U.S. banks, much less the largest U.S. banks. And what we actually have done is structured it so that Van Eck is the investment manager behind Agora's reserves. And so you have a 70-plus-year-old asset manager that manages $100 billion+ managing the assets. And then we also have State Street as the cash custodian and fund admin. And so the assets are custodied at one of the largest GSIBs in the world, right? And so you know that they're safe, secure. They're not at some sort of offshore bank, or it's super opaque, where who's actually controlling the assets, or at a small regional U.S. bank, right, that might be at risk of solvency issues, which we saw obviously in the past. And so we wanted to start the stable with institutional grade backing and support and really infinite scalability. We could take in $100 billion tomorrow. And I don't want to say that wouldn't matter or wouldn't raise any flags, but the bank could support that really easily. Whereas that's not true for 99% of global banks, right? And so starting with institutional grade scale was really important for us. And so that's how we're working with Van Eck today. That's really their only involvement, is just managing their reserves. But I'm sure there's things that we can be doing with them in the future.
Right. And maybe just last side question before we deep dive in Agora, that it should already kind of start to pitch. You were mentioning that there were investors that you were looking at when you were younger. What were these investors? Were the ones that you were looking up to, getting excited about?
Yeah, a lot of ones that are not as well known. I mean, Stan Druckenmiller is one who's more well known, but his ability to compound his portfolio at double-digit percent, 20, 30% a year for decades is crazy. It's just as impressive as people like Tom Brady, who were at the top of their game for 20, 25 years, right? And it requires a tremendous amount of discipline, intellectual curiosity, and that's what really got me interested. I also would say at an early age, you think that people in finance, it's one of the highest competition environments with some of the smartest people in the world, and that to me is interesting and exciting, because people are putting their money where their mouth is, which is, I feel not the case in most of society today. There's a lot of pontificating on the internet, but people aren't really backing it up. And as an investor, you have to, right? And there's no way to sort of massage the truth. It's either you perform or you don't. The numbers are there, and they don't lie. So Stan Druckenmiller is one, and I have a lot of deep respect for.
Right. Yeah, and it's going to be even more and more so the case on blockchains, where this data is accessible completely on chain or via Dune dashboard, and on daily basis you won't be able to lie, and your performance will be a source of truth. So I guess coming back to Agora, you kind of mentioned it, institutional based, very scalable compared to most of the other stablecoin in the market. Can you maybe introduce Agora? And is that true? Do you see other differentiator that you bring to the market?
Yeah. So when I was still in my seat at my prior firm, I was looking at the market, and you really only had two stable coins, centralized fiat coins that mattered, right? Tether and Circle. Tether was sort of part of this 1.0 class of stables. They were the first digital dollar brought on chain, non-US focused, non-US issued, and they really kicked off this market. And they famously don't really work with that many people directly. And then you had the second wave of stables that got going in 2018, 2019 with USDC, BUSD, GUSD, a lot of these exchange-backed stables, right? And they started to have a lot of demand because they replaced BTC as a quote token on many of these exchanges. I got into crypto in 2016. So I remember the days when Bitcoin was used as a trading pair against everything, right? Like from IOTA to Cardano, and then like Feathercoin and Ravencoin, all this stuff. And so these exchange-backed stables started to replace BTC as the quote token. And then since then you've had this explosion of different market participants, whether it's staking providers, chains, different VMs, different custodians, regional exchanges, wallets, and the market's changed very dramatically, right? This whole explosion of DeFi. Like DeFi didn't really exist in any material way until 2020. And what you now have is this big conflict of interest problem, right? Where you have about 150 billion of fiat coins outstanding between Tether and Circle, but no one else is really a participant in that economic system other than Coinbase, who receives half of the income generated from USDC, Tether, and Circle. And to me, like, this is fundamentally like wrong. I like these assets would have no value if it weren't for the businesses and their users choosing to use them. And it kind of seemed worse than the banking system. And I was like, this is not why we started crypto. And so I wanted to change that and felt that I was in a position to do so. And so at the time, there were a lot of these yield-bearing stable coins coming out. And I think that is a really tough sell from a centralized participant, right? I think if you're a decentralized model, that works. But if you're centralized, it doesn't for a few reasons. One, you're a security in 70% of global jurisdictions, right? Which really limits your utility. And also the people that can interact with you, like whether it's a market maker or someone else, right? And so that's number one. Number two is they really don't have any margin for liquidity development, which is really important. And because they're giving it out to everyone. And so I think that's why you saw a lot of these centralized yield-bearing stablecoins fail to take off in a meaningful way. We launched 3 months ago, and we're already doing over 10x the volume on a daily basis of the two largest participants in this market. Which I think highlights the challenges of the centralized yield-bearing model. And so from our perspective, we were looking at the market and we're like, okay, how do you get all these different businesses and participants into your network? And so what we've designed is a one-to-one stable. It's issued outside the United States. We focus on the non-US market and then go to businesses, whether it's applications, exchanges, fintechs, whomever, and say, hey, for services that you provide to us, we'll share the majority of the net income with you, right? Whether it's 60, 70, 80%. And ultimately, that means it's effectively your own stable on your platform. You're capturing the majority of the value, but then we're going out and doing the things like building the compliance program, right? Getting the licenses, building liquidity, building the network, building infrastructure, right? And so it enables all these different institutions that are using USDC or USDT to swap in AUSD and suddenly be making a significant amount of cash flow that would have otherwise been going to one or two players, right? And then these businesses can then use that cash flow however they want, right? And better their business and better the service for their users. And so that's the model, and that resonates with people, right? Because a lot of these businesses feel like they're leaving money on the table, and it's because they are. So I'll pause there, but that's a little bit on us and what we're doing.
No, that's super clear. And actually, I mean, we can only agree that to compete on supply, the large ones, if they will one day, will have to give back a part of their revenue to the ones that distribute them. That's for sure. And do you see, maybe to pause on this, do you see these businesses giving back the rewards to the users or keeping it for themselves? Is it a mix? Yeah. What do you see there?
I think it depends on the business, right? So we interact with like B2B payment companies, right? Where they may just be holding funds for a few hours and they don't really have the end users where it would make sense to maybe share income with them. But for applications or centralized exchanges, you can imagine that they'll probably try to run some of those programs and see if it makes sense. And if it does, they'll probably lean into them as a source for growth. So we definitely expect that some of these businesses will try different programs, and some will lean more heavily on this marketing side. I would also say what's important is like money needs to be credibly neutral, and that was one of the issues that we saw. Is like if you had a USDC on Solana or like in Fireblocks or on Bybit, half the revenue generated is going to Coinbase, who has competing products. I think that's like something really that we want to highlight is like we'll work with anyone. We just need to KYB them, and we think it's your platform, your users, your money, right? And you should be able to use that however you like, and that continues to resonate with people.
Yeah, I definitely see the pitch for Asian exchanges, right? If I am one of these leaders at one of these very large top 10 Asian exchange, why I would use Agora instead of the competition. I guess that's part of my following question. You mentioning you're focusing on every market outside the US. You didn't mention outside Europe with the MiCA regulation that is now in place. And so yeah, can you explain what is your geographical expansion, why these regions matters for Agora?
Yeah. So something that was really important from us from the get-go is just focusing on the non-US market, right? It's why we've issued outside of the United States. We don't serve US businesses as primary participants, because if you think about where stablecoins are really valuable, it's outside the United States, right? It's making cross-border payments easier, serving EM or developed market dollar demand. Like those are the two things that are really driving this market. Whereas if you're American, it's pretty easy to move money within the country. But it's when you get outside the United States that things become really challenging, and it's 100x improvement. And so we're focused on Asia, but also Latin America and Europe. And we want to really build that sort of global institutional grade, credibly neutral fiat coin. And so that's what we're planning to do. I'm headed to Buenos Aires tonight to meet with some of our partners down there. But that's why we're focused on the non-US market, is because we really believe that to be the opportunity. And it's fortunate for us that our largest competitor is working with the largest US exchange, because that's not really where we want to be going anyways.
That's right. Makes sense. Makes total sense why you traveling to Buenos Aires. I think tonight or tomorrow, or you spending a lot of time in Asia in general. And there are other continents, maybe Africa is I'm sure part of your focus. Coming back on your go-to-market strategy, you mentioned the exchanges, the wallets, the custodians, the crypto-native people, crypto-native companies, but also the payment companies moving forward, maybe the fintech, the neobanks, and the PSP using stablecoin as the market grows. how do you see this go-to-market engine? When do you think these non-crypto native companies will move into the space and start to use stablecoin in their flow?
Yeah, I think you're already starting to see it. If you look at our customer base today, so we've onboarded over 50 businesses in the last few months. About 80-90% of them are pretty crypto native, but about 10 to 20% are really like more Web 2 focused. And I think stable coins are the first stepping stone for a lot of these traditional businesses to get into crypto, so to speak, right? Because moving, with stables and fiat coins like us, all you're doing is just moving money cross border. It's not as complicated as interacting with Aave or Morpho or staking providers. And so for a lot of these companies, it's not just 10x better, it's 100x better using stables to move money cross border. And so we're starting to see some startup companies leveraging stables to provide a better service to the incumbents, but also some of the incumbents are starting to move in themselves. And I think this is an opportunity for us to go serve them, right? You saw PayPal launch their own stablecoin. I imagine that they'll be using that for a lot of internal mechanics for their businesses. And then we're there to serve their, right? Because all these payment companies aren't going to be using their competitors' stable, and this is why I think it's really important to be credibly neutral, because the market is so much bigger, right? We can go to the thousands of payment companies and say, hey, use AUSD. We'll share the majority of the underlying revenue with you for services that you provide to us. It's basically your stable, but you don't have to do any of the work, right? And by the way, you're not using your competitor's stablecoin and effectively funding them. And so we're seeing a ton of payment companies in Singapore, a lot in Colombia, Mexico, start coming to us. Actually, some in Africa as well. And so we're excited to continue to help pick up share from that side of the market.
That's super exciting. 50 clients, 80% crypto native, 10 to 20% are Web 2 or non-crypto natives already in all of these jurisdictions. And do you have to get go-to-market people on the ground to serve these clients, or is it only you? I mean, I know you're traveling 90% of your time these days, or maybe 80% all around the world. Is it scalable? Do you have to get people on the ground?
Yeah, we do. We are expanding the team soon. Right now, it's a two-man show. It's myself leading a lot of the BD and customer relationships, as well as Patrick, who's our head of BD in Asia. Prior to Agora, Patrick was head of institutional sales at Paradigm, the options platform. So he knows every single trading firm in the world, and so has been super helpful in building out that network and holds the fort for us in Singapore for now. But we're definitely going to need to build up our ground game as well as our developer game in the coming months and plan to do so.
Perfect. Just give me a second. I need to close the door, so we'll cut that part. Yeah, no the time spent so far. I just saw it. And yeah, thanks for the transparency. I guess one of the follow-up question I had, after geographical expansion, there's definitely this geographical expansion in crypto, which means which protocol you support. I think today you support Ethereum, AVAX, and Sui. That's what you mentioned, you cited in the beginning of this podcast. What about the others, and why protocol expansion matter in the first place?
Yeah. So native stables are much better than bridge stables for security reasons, capital efficiency reasons. And if you are a company that's building on any of these networks, you want to have a native fiat coin, right? And be able to work directly with the issuer. And so I actually think it's a massive unlock for a lot of these chains that don't yet have a native stable and are using wrapped or bridged versions. For us, we want to go where the puck is going. And so, if we really believe that the future of financial services and payments is blockchain. We want to work hand in hand with some of the best organizations that are making that happen, right? And so networks that have very high throughput, low finality in terms of the timing, and really also like are just professionals in every sense of the word, and execute, right? And so that's why we chose to work with Avalanche and the Sui team so early in our journey. There's many more chains that we're coming to natively in the next few months. We're going to have two big announcements over the next month that I think folks will be really excited about. But we want to work with those high quality teams that are pushing the frontier of the space. And interop's a big topic as well, and so we're working with Wormhole on that as well to complement sort of our existing native and future deployments. But you got to be native if you're a chain and you want to have real businesses building on top of you. You have to have native stables. And I think Avalanche is a great case study of they're obviously a very successful ecosystem, have billions of dollars of stables already on the chain and in DeFi. So one might ask, like, okay, well, why do you need another one, right? And I think the answer is that it's very clear that the future of stablecoins are regulated, institutional grade, and also that this rent-seeking model that the existing incumbents have pursued is not tenable over the long term. And you need a credibly neutral player that has this open partnership model. And we really are the only one in the market that is doing that. Because a lot of these businesses want to capture a lot of that value back for themselves. And so we launched on Avalanche about 2 months ago. We've been up and to the right in terms of volume and usage. So we actually just are passing 100 million in weekly volume on Avalanche this week. We have a few big exciting announcements around their summit, which is what I'll be going to actually in Buenos Aires. And so even if you're a large established ecosystem, we fit right in as a complement to the existing players that serve that ecosystem. And I think businesses are really demanding this. Like it's, they see the tens of billions of dollars that are going to Tether and Circle and saying, hey, we're actually the ones that are driving the usage of these assets. Like we should be part of that economic network. And so that's what we want to build is this economic network where the businesses are capturing the vast majority of the value.
Right. You also talked about high throughput, very efficient, low cost blockchains, Sui, AVAX, I guess, Ethereum and L2s that you will continue supporting. Do you see other like Solana or even Tron that we kind of I remember we had this discussion. Tron is a massive player in the stablecoin market. 36% of stablecoin are sitting on Tron. Do you think these ecosystem could be part of the roadmap in the coming months?
Yeah, absolutely. I think Solana is just like Avalanche, right? They already have an established ecosystem, billions of stables. But for every dollar that USDC generates on Solana, half that's going to Coinbase, who's competing directly with, right? And a lot of these chains feel that Base is a direct competitor to them, right? And they don't like that. So like we, a mantra of ours is we're never going to be competing with our customers. I'd also say to your Tron question, the chain expansion is very much part of our geographic strategy as well. I talked to regulated Nigerian exchange founder 2 weeks ago, and I'm always trying to learn what are folks using, and I asked him like, what are the most active networks in Nigeria? And he says everyone uses Tron or BSC. It's like that's it, nothing else matters, right? And so if you want to be global, you have to be on a lot of these different networks that in some ways have like localized users, right? Even though they're global networks. And so that's going to be an important part of our strategy. And it's interesting too, like, and this is why I spend a lot of time on the road is like, I want to meet these people in person. I want to learn because if you just sort of stay trapped in your environment, right? In the United States, everyone's talking about Base, right? Because Coinbase is the monopoly exchange in this market. If you go to Asia, you go to Africa or LATAM, no one cares, right? And so you really have to be open-minded and meet your customers where they are, which we have an ability to do. It's also why we constructed our cap table the way that we did, right? So Dragonfly at our seed round, they obviously have a large presence in Asia. We also had several different of the largest Asian exchanges, as well as a friend of a firm that's close to U.S. Exchange Invest. We had people like Consensus, Wintermute, Galaxy. We wanted to build this coalition of various different partners so that we can be global from day one.
Right, that makes sense. Also very, very excited about Tron usage. I think it's definitely a big one in Africa that you mentioned. Turkey, Southeast Asia, one of the most, if not the most active chain with third world country users transacting in stablecoin every day and being exposed to the dollar. Yep. One thing you touched on was the fact that natively yielding stablecoin being centralized won't fly, specifically in terms of regulatory requirements in most of these jurisdictions. What about the decentralized stablecoins? Do you see a place for decentralized stablecoin in markets? Decentralized stablecoin versus centralized. What do you think there?
Yeah, I think they ultimately serve different user personas. Right. So, and the way that I like to think about this is like sort of like the fixed income market is like if someone wants to buy like a treasury bill, they'll buy a treasury bill. If they want to buy like a junk bond because they're okay with like the risk and like the, in the reward, like they'll buy the junk bond. Right. And I think a lot of people kind of glom the whole stablecoin universe together when they really have different users. Right. With us, we're one-to-one institutional grade. We want to be that like really highly credible, high utilization, high liquidity dollar asset, right? Super flexible. Payment companies can use us. We can be using DeFi, use this quote token on exchanges, right? I think that will always be the largest market. This is the centralized US fiat coin market. But I think decentralized stables are great products and serve a different user persona who may want additional risk, or to not be touching the banking system in some way. My co-founder, Drake, one of my co-founders, Drake, was actually the lead dev at Frax. So we work very closely with the Frax team. And I think there is absolutely a need for these different types of models, just like how in sort of the fixed income world, you have all these different types of products that have different compositions underneath, right? So all of our assets are in overnight reverse repo or very short-dated US treasury bills. But with decentralized stables, like you can have sort of a mix and match. Like maybe you have, and you'll see this, you'll have AUSD backing some decentralized stables as well as maybe like USDE or like other different types of CDPs or structured products. And if users want to be holding sort of dollar denominated assets, but have like natively higher yield, like decentralized stables are the best product for that. And the reason I think centralized stables aren't a good product for that is because you can't be interacting with the banking system and pay non-KYC to individuals. Like that doesn't fly. Right. And even with Mika, you've seen this start to play out, right? They say, okay, you have the centralized stables, you can't pay yield or interest to anyone, and it's very clear. But they sort of like left like a little window open for these decentralized providers that are innovating in a sandbox, right? And so I think if you're looking for higher risk or yield opportunities, these decentralized stables are a really good opportunity or vector to get that. But I think centralized stables will not be in most global markets.
Right. No, I agree. And of course, with tokens program and more DeFi and pure crypto usage, at your risk having higher rewards, but for most of these day-to-day usage, having a stable, institutional, scalable stablecoin makes a lot of sense. But there's another category in the market that we see emerging are securities tokenized. or real world assets, as they say. How do you see this market evolving regarding the two categories that we mentioned, centralized stables and decentralized ones? Is it something also Agora could be close to, or even launched, the own version in the future?
Yeah, I think this market is even earlier innings than stables. I think the market for these types of products today are primarily crypto users. So it's a very small market to be going after. There's a lot of things that we're actually doing, working with these tokenized treasury issuers, which we'll announce either later this year or early next. Because we're non-US, we're uniquely able to serve. So we want to be working with all of them and be like that interoperable stable between them as like this market continues to grow. So that's sort of how we view the market. I think you'll start to see these institutional grade yield assets, right? Yield products like tokenized treasuries really start to take over as collateral on some of these centralized exchange venues over the coming years. As folks get, the institutional parties get more comfortable with them. And we want to be that interoperable stable, right? Where you can sell 50 million of USYC or BIDL into AUSD 24/7, whether you're on Bybit or Deribit or wherever. And so I think this is, one of the next big market movers, but I still think it's early days and moving really slow. I don't see tokenized funds really taking off for another 4 to 5 years. And the reason for that is because you need, for them to be 10x better than, the existing tokenized treasury products on the on the New York Stock Exchange, you need to have all the banks, custodians, prime brokers, and market participants comfortable interacting with these products at scale. For that, step one, you need regulation. We don't really have that in the United States in a clear way that is fostering experimentation with this. So you just, a lot of the banks up until recently were unable to really custody crypto assets on behalf of their clients. And it gave, which you may know well, Coinbase effectively a monopoly on the ETF market, right? Which is like a bit ridiculous. And so you need these players comfortable interacting with these assets. They're not there yet. So I think that takes a few years. But once this starts to happen, I think you're really going to see a dramatic inflection in the usage of these assets. And so I think the market's still small today, but it'll be enormous in 15, 20 years. But we still got another like 5-ish years until that starts to take off, I think, in a meaningful way. Because even today, there's a couple billion in tokenized treasuries. Like that's teeny relative to the stablecoin market, and it's even tinier relative to the traditional tokenized, in the traditional treasury market, right? So we're not there yet.
Right. But you're preparing for this market by building bridges between all these real world assets so that you are the stablecoin that link them, or at least you can move from a real world asset tokenized treasury position in an exchange to Agora very easily, one way or another.
That's right. And we want to, again, be credibly neutral with all the different asset managers, whether they're crypto native or established ones. We're working actually with both, some established ones on the banking side, as well as like traditional asset managers, like sort of the Franklin Templetons of the world, as well as some of the crypto native ones. And then we just want to be that credibly neutral interop layer and help actually facilitate the usage of these products, right? Because one of the challenges today with them being used as collateral on exchanges is they rely on the traditional banking system. So you can't off-ramp them 24/7. But what you could do is maybe off-ramp to stables 24/7. And so there's ways that will help facilitate that without credit. And that's what I'm really excited about. And as they come with additional products to market, we want to work with all of them. Again, like it's important to be credibly neutral. And so that's how we're going to sort of leverage the growth of that market.
That makes sense. That's smart, very smart. I guess 2 last questions for me. First, what is the end game for Agora? How do you see the company in 5-10 years? What will you be building? Which customers you will be serving? Where do you see Agora and the digital dollar that you have today, but any other products or services that you might offer?
Yeah, ultimately, we want to be the most liquid global digital dollar, right? So we're going up against two very large incumbents. It's not the easiest goal, but it's a lofty one. And we also want to make access to the dollar easier and cheaper for everyone. A large part of our mission isn't just servicing crypto, but servicing people that have been left behind by traditional financial service systems in their own country, right? In Mexico, you have 50% of the population is unbanked or underbanked, and it's because many of the people in these different countries, either there's not good rule of law, or they're bad customers, right? And by bad, I mean the banks say, hey, we don't want you because we're not going to make enough money off you, and like that's like ridiculous. If you don't have like the freedom to transact, like you don't have freedom at all, in my opinion. And as a fiat coin, we can leverage the blockchain, right, to be that bank for all these people. And so that's an important market that we're going to go after. I think in future products, you'll see us leading into infrastructure more. As the issuer, a lot of things sort of flow from you, right? You've seen a large stablecoin continue to raise off-ramping fees, and that affects everyone downstream. Whether it's the infra providers or the businesses themselves, like we always want to be the easiest and cheapest option for these businesses. And so we'll start to lean into that a bit more. Ultimately, we're sort of going after Visa's market, like this global open network. And we're nowhere near big enough to even remotely, be in a conversation with Visa today. But I do hope that in 5 to 10 years, we can be going to merchants and saying, hey, like, do you not want to pay 200, 300 basis points anymore? Like, what if you only had to pay like 50 basis points or 25 basis points? And so that's how we're thinking about it. And yeah, making, as big of an effort to get there, as fast as possible.
Right. I mean, that's very ambitious. Tether, Visa, if you hear us, Agora is going after your business, and that makes complete sense. Today, 3 or 4 or 5 or 8% on and off ramping to access a stablecoin,
It's ridiculous.
and it's ridiculous. I agree. And once, by the way, you are on chain, this fee costs you less than 0.1%. So I guess there will be other business model emerging, and we think actually the reverse business model is an interesting one because you might have a saving account if you not pay, and if you start to move money around, then you get out of the saving position. Maybe last question on your view of the market, crypto in general. What excites you outside stablecoin, outside digital dollar, that you haven't seen maybe when you started entering the space about 10 years ago?
I think infrastructure is like finally in a good place. There's not one, but dozens of like really strong, high throughput, low latency blockchains. And I think we're ready for the scale. Like you've seen even this week with Avalanche is off the grid, right? Like millions of users, like just all of a sudden like started using Avalanche behind the scenes, and it's working, right? Like with Sui, Solana, like Mantle, like there's like all of these different networks that can service a very large user base and usage of activity. So I feel like the infrastructure is finally in a good place. Something that like beyond stablecoins and sort of the adjacent things that we're touching that I'm excited about is the ability for users and individuals to just like use chains as their bank, right? Through like applications like Aave or Morpho, and like the different companies that are pulling this together in all one interface for like a consumer, right? Where, in the back end, they're, let's say plugged into Aave, right? And Morpho. And it's like, okay, if you want to save like 5% or 10%, deposit AUSD into these like earn vaults, right? And then, like they're also hooked up to an on and off ramp provider. So if you want to cash out to dollars or euro or Mexican peso, whatever, you can do that too. Like, I think, like that is going to be an explosion of consumer finance. Is like, you're going to have these like fully blockchain based neobanks, which is going to be awesome. I would love to be a consumer of one, but I live in the United States, so it's a little bit tough. They mostly geofence us. I still don't think I can buy ETH via MetaMask. But like that's like the really cool stuff to me, because that is like the holy grail of like an open, permissionless financial system, and like making it really easy for consumers to just use it and like not necessarily feel like they're interacting with something super complicated or crypto native, right? It's like, oh, this is just like my bank, right? And like the settlement layer is ETH or Avalanche or Solana or Sui or whatever it is. Like Morpho is like, or Aave is like the lending market, and you can swap assets on Uniswap or now maybe Unichain. Like it's like that, and like bundling that up into like a really comprehensive and user friendly experience is like, to me, like very exciting.
Interesting. And that's definitely what we're trying to build with Kiln DeFi, aggregating all of these opportunities and make it easily accessible, easily integratable, and so that, the platform can monetize it on chain. And even thinking of like, you have a native token, ETH, Solana, or others that you can put on Aave and Morpho and get stables as that you borrow on the other side of the spectrum, and then pay with a credit card in the real world, whatever service or good you want to pay. That world seems very exciting to be, and not completely far away, if you agree.
I do.
It's exciting.
I think it's almost here.
Right. Thanks, Nick, for your time. It was amazing to have you on the podcast. And I hope to see you soon somewhere in the world, maybe in Hong Kong in a couple of weeks, in Latam, I don't know. But congrats on what you're building, and thanks again for being among us.
Yeah, thank you for having me.